BYD, also known as Build Your Dreams, have continued to win against American giant Tesla. One can easily see this if we graph out the stock performances of each company. Here, you can see that over the past 3 years, when one compares the stock performance of the two companies, you get to see just how BYD is winning against Tesla. Here, you can see in the past few years, Tesla and BYD were relatively even when it came to their stock prices. But there was a time when Tesla shot up and had left the share performance of BYD. However, as one can see, in the recent action, BYD had overtaken the share price of Tesla by a huge difference. Tesla saw its share price collapse, while BYD saw its shares become one of the biggest performers in recent months. Such an occurrence is quite daunting. For one, Tesla has always been known as the best performers amongst automakers. In fact, if we were to graph out the market capitalization of all the automakers out there, we still get to see that Tesla is still far ahead as compared to BYD. Here, you can see in the list that Tesla, as of the time of writing, has a market cap of nearly $800 billion, which far outshadows BYD's market cap of just $166 billion. So, in this case, does it still mean that BYD is leading against Tesla? Well, while share performance has been good, it is true that BYD isn't as big as Tesla when it comes to market capitalization. But there is a good reason why BYD is actually pulling ahead, and here's why. The very reason as to why one can say that BYD is ahead of Tesla is if we take a look at the market share of global electric car sales. Here, you can see that Tesla, from 2018 to 2021, had maintained the lead against BYD. But after that, BYD had cemented its lead up to 2023. This data, of course, does not include 2024 yet. But if we were to graph out the total vehicles sold of BYD and compare it to Tesla, we get to see a strikingly different picture. Here you can see that BYD had sold nearly 4 million vehicles, whilst Tesla with just 1.7 million. That just means that BYD had sold more than double than what Tesla had sold in 2024. But as many of you may probably know, BYD is more than just a passenger EV producer. They are also a dominant force in the broader new energy vehicle market, which includes plug-in hybrids, electric buses, and commercial vehicles. This diversification gives BYD a major edge over Tesla, which continues to focus almost exclusively on battery electric vehicles, BEVs. But here's the thing. If we graph out the annual battery electric passenger vehicle production only, we get to see that Tesla has always maintained the lead in many years. But for the year 2024, BYD had actually pulled ahead of Tesla. That's quite an insane thing to happen, considering that Tesla's market valuation is still far ahead when compared to BYD. Yet, BYD is far ahead of Tesla in both total electric car sales and when we only talk about electric passenger vehicle production. Moreover, if we also take a look at the total revenues of both companies, we get to see how Tesla has been far ahead compared to BYD in the last few years. But in the most recent data available, BYD had actually overtaken Tesla in terms of revenues. Now, there's a good reason why BYD isn't very far above Tesla's total revenues, despite having more cars sold, and that's because of the difference in their product positioning and pricing strategy. Tesla primarily targets the premium and luxury segments of the EV market, with higher price tags and profit margins per vehicle. On the other hand, BYD caters to a broader consumer base by offering a wide range of affordable electric and hybrid vehicles, including models priced significantly lower than Tesla's cheapest offerings. But what's quite surprising is the fact that even though BYD may sell their cars at a cheaper price, they actually match Tesla when we talk about gross profit margin. Before we dive into the data, one must understand that gross profit margin is the percentage of revenue that remains after subtracting the cost of goods sold. In simple terms, it shows how much money a company makes from selling its products before paying for other expenses like marketing or research. Here, you can see that from 2023 to the latest data available, BYD's gross profit margin actually exceeds Tesla. That basically means that BYD is making more money per dollar of revenue than Tesla, even while selling more affordable cars. This is a strong indicator of BYD's cost efficiency and smart production strategy. Some analysts indicate that the reason for BYD's higher gross profit margin is because BYD vehicles' components, like batteries and chips, are produced in-house. This vertical integration allows BYD to control production costs more effectively, contributing to higher profit margins. In fact, a teardown analysis revealed that 75% of the components in BYD's Seal model are made in-house, compared to 46% for Tesla's Model 3 produced in China. This extensive in-house production enables BYD to maintain a gross profit margin advantage. So, as you can see, one of the reasons why BYD has continued to cement its lead is because of pricing strategy and the fact that BYD has the ability to maintain high profit margins. And finally, one of the biggest reasons why BYD is pulling ahead can also be because of the recent challenges that Tesla has been facing. In case you're not aware of the latest news, we have seen problems related to Elon Musk, who is a leading figure in the car brand Tesla. Elon Musk's political engagements have influenced public perception of Tesla. His support for controversial figures and policies has led to a polarized view of the brand, affecting consumer sentiment and sales. In fact, according to recent data, for the first 2 months of 2025, which are January and February, the sales of Tesla had been hit, not just in the United States, but all across the world. For instance, here's a graph on the Tesla sales performance on year-on-year change. Here you can see that in Germany, Tesla sales were down more than 70% compared to last year. That's huge. It's even more shocking when you look at the data and see that the country saw a 30% year-on-year rise in electric vehicle sales in February. Likewise, in their domestic market, if we graph out the percent change in brand registration for California, we get to see that Tesla actually took a hit of 11.6%. That's quite concerning because California is well known to be the biggest domestic market for EVs, thanks to its state mandate that 35% of new 2026 car models sold by automakers must be zero emissions. Yet Tesla sales slumped. Then secondly, on top of poor sales and Elon Musk's controversial engagements, Tesla also faced multiple product recalls, notably with the Cybertruck. A recent recall involved over 46,000 units due to a defect that could cause a panel to detach, posing safety risks. This marks the 8th recall for the Cybertruck in just over a year, raising concerns about product quality and reliability. These recalls may have affected the share price of Tesla, which is one of the reasons why it has underperformed against BYD in the past few months. And finally, the most important reason why BYD is performing better as compared to Tesla can be attributed to China. Tesla's China sales have performed very well in 2024, but if you take a look at the past 2 months from January to February of 2025, we get to see that Tesla saw a big decline in both months. Here, as you can see in the graph, Tesla saw around 50% in sales decline for the first 2 months of 2025. BYD, on the other hand, if we were to graph out their sales by month, we get to see that the company saw a decrease if we compare it from December to January, but it is much more when we look at it from a year-on-year perspective. In January of 2024, BYD only sold 201,493 vehicles. But in January of 2025, it sold over 353,838, a 47.5% increase year over year. And that's arguably because of Tesla's poor sales globally, and also because BYD is winning more in China than in the United States. China, after all, is their home turf. BYD has been known as the go-to brand for millions of Chinese consumers. This can be attributed to some government incentives to BYD's lower cost structure, which have all created a near-monopoly scenario in certain segments of the market. So, as you can see, BYD has cemented its lead, but may continue to surpass Tesla. But anyway, do let us know what you think. Thanks for watching.